end, we're going to have a Q&A session. So I'm going to kind of do a little overview for you of the home buying process. And then Beth will go into her side of things on the mortgage end, and we'll just do a pretty quick overview for you. We don't want to, bore you too much with the process. We know it can be a lot to take in as well. So we're going to give you that brief overview. And then if you would like, Emily, who is here also in the chat, she is working with our team and she will help consult with you and go over the process and schedule in a consult for you if you want to have a deeper conversation with us. But we know there's going to be a lot to cover here. So yeah, feel free to give us any questions you have as well. Okay, perfect. Let's see. Might as well get started here. If anybody pops on, we can just kind of clue them into how things are going. So let me do here. I'm going to share my screen with you all. All right. So let me know if you all are getting that okay. Has it popped up? Perfect. Voila. Perfect. All right. So thank you everybody for coming here. You've probably come in like a lot of different ways. We've been, advertising this event online. Some of you I already know, some of you have actually already shown houses to. So we've already had some conversations with Beth as well. And then if you are here from Babes Who Network, our networking group, hey as well. Good to see you. My name is Lily Wyss. I'm a residential real estate agent here in Portland, Oregon. I, take care of people buying houses and selling homes in Portland and all the surrounding areas and neighborhoods and cities. And yeah, it's been a beautiful job. I've been doing it for 4 years. And one of my favorite parts as someone who used to be an educator is educating people on the home buying process. So for me, this is one of the most fun parts, is letting you know, hey, this is what the steps are to make your home buying dreams come true and become a homeowner yourself. I know it's super, super overwhelming. I have conversations with people all the time when I'm out chatting where I can't help it, where I'm like, no, home buying is way more possible for you. Like, this isn't something that's going to take you 10, 20 years. You don't need all of this stuff. You might not even need as much money as you think it would take. We are here to show you that and to guide you on the way to actually handing over those keys to you for buying a home. So today, as we said, will kind of just be an overview of that. As I said, my name is Lily. I've been in real estate for over 4 years now, which is wild. It's gone really quickly, and I've learned a lot of things about the business and probably about life itself as well. I have been here in Portland and in Oregon itself for about 8 or 10 years now as well. So been loving living here and just really love the idea of letting people find their own little slice of Oregon and making it their own. I work with both buyers and sellers, which really gives me help for you guys as we're out looking at houses. I can tell you, hey, this is what I would say on the listing side of things. This is what you should expect. This is how we can get on the good side of the seller, especially in a market like we're in right now, which we'll talk about a little bit, which is a heavy seller's market. We want to make sure we're putting our best foot forward and making sure we're working with all the best people, doing all the strategies we need to do in order to buy a house. So yeah, that's definitely been a big asset in the seller's market that we're working in. So to start us off today, we're going to be talking about the home buying process. Now, some of you who I said before have been through the buyer consult with me. When we do that, we usually talk about this buyer wheel that I have. If you meet up with me, we'll go through it in kind of more detail, but this really goes over for you the whole process. If anybody wants to screenshot it here, feel free to. Otherwise, I will send it to you in an email, as it's a very helpful resource for us to have. I just want to check here quick if anybody pops on. Does anybody know if in this screen view, if anybody else pops on, if I can still see them? Like add them to the list. Let me check. I want to just check that quick before we move on. I don't want to leave anybody in the dust.
Yeah, I can see that we have 8 participants, Lily. That's okay. What I'm seeing.
Let me open the chat quick. That might show me. Okay, I'm not seeing any. Okay, perfect. We should be good. All right. Beautiful. All right. Thanks for holding with me on there. I just want to make sure. I will send them the recording if that did happen. All right, perfect. So yeah, as I said, here is the buyer wheel. This kind of just goes over the whole process of buying a home. We're going to kind of dive into that now here for a second. So when you start your home search, really what we're going to start off with, first thing I will do is say, hey, go talk with Beth. You know, really the biggest thing that's going to come in the beginning of the home process is knowing your budget and knowing your timeline for how you can get to the point of buying a house. Some people, they're actually shocked that they're already in a really good spot. Their credit is really strong. Beth will talk all about this, but they're in a place where they actually can probably afford more home than they ever realized, where they think, you know, maybe I should have to wait a long time. That's not as true. So it's really, really good. I always say meet with a loan officer as early as possible. So all of you being here is putting you already in a really, really great spot. And then for knowing all of that, so as you're kind of going through all of the loan pre-approval process with her, while that's happening, we on our end will start to really talk about what it is that you want in a home and what you're looking for in a neighborhood, all of that, and really, really start to dial it down. That way I can start educating you on the market, and not just the market in general, but what is happening in those specific markets that you are interested in. So if you're interested in a certain price point, if there is a certain area in town or in other cities that you are interested in, I'll really dive into that and give you a good idea. And then especially if we're not buying a house for 6 months, a year, I do often meet with people where they're a year or two out that I'm just educating them on the process. I can then continually let you know how things are changing, how things are happening. I can let you know like, hey, maybe it's actually a better idea for us to help start your search a little sooner because this is what's happening in the market. Or yeah, maybe you're in a spot where we can wait a little bit longer as inventory rises, all of those types of things. And knowing exactly what it is that you're looking for in a home will really help that. So we're going to really dive into what are your must-haves in a house. So like one that I've noticed for a lot of people is having AC is a lot more important now. Wasn't as important before. They would say like, oh, I can put it in myself. Or, you know, it's one of those things that it's like a lot of people now are like, I need that, or you need to tell me exactly how I install AC in the first day that I move in. I'm like, cool, we can do that. If anybody has that question, we can go for that. And then there's things that are wants where you're like, hey, I really don't want carpet in my house. Like I have allergies. I get it. I do not like carpet. When I bought my condo, that was the first thing I did. I teared all the carpet out and put engineered wood in. So that's more of a want. That's something where it's like, I would prefer that there's not carpet, but we can change that for you if you have the finances to take care of that issue. So we'll really dive into those as well. And then also, what are your no-goes? So what are things to you that you're like, we shouldn't even look at that house? Is it, you know, on a really busy street? Because I'll know if someone tells me that before it's on a busy street and we've looked at a bunch of houses and they're like, well, let's go check this one on the busy street. We'll have a conversation of like, is it going to be a no-go totally? Because you'll get tired looking at houses. So we want to know those things that it's like, it's just not even worth looking at. And then I also recommend, especially if you're newer to the area, right now I have noticed I have a lot of people that are relocation buyers. So you might know Portland or Beaverton or Hillsborough or Gresham to some degree, but you're not really sure. I do recommend touring those less known areas that you're thinking of purchasing in, because it's hard when we start looking at houses and then you're assessing whether the neighborhood works for you. It's better for you to go and do those tours. One thing I've started doing for people, again, because there's been a lot more relocation buyers for us, is I've made Google Maps little lists for you. So if you're like, oh, I'm interested in the Alberta neighborhood, I have a bunch of restaurants and shops that you could go and check out in that area. That way it makes it a little bit less of a chore and a little less bit of homework for you. And you can go and see an area that you're really interested in before you even start the home search and get an idea if that's actually going to work for you. And then you can let me know if it is. We'll look at what homes are available, what they're actually selling for, and if that's a doable thing, and if you'll actually be able to get the home you want in those areas. So that's kind of just the diving into it. And before we even look at a house, in my opinion, I think it's really important we're both just super, super clear on what you want. That way you don't get distracted by something like, if there's a situation I've had where people get really, really love a house because of the staging or something that's really cool in the home, and then they forget like, oh, but I really needed a fireplace. And so that's what I'm there to help you remember. It's not just negotiations. It's not just, getting you through a transaction. It's also there to be your advocate and remember like, hey, we needed that fenced yard for your dog. Like that's all we need to go through for the home buying process. And then once we have that really good idea of what you're looking for in a home, and we also have the loan pre-approval done with Beth, thank you, Beth, that's when we start the actual transaction. So we have a good idea of what your budget is. We have a good idea of what you're looking for in a home. We're going to start looking for houses. Biggest question I get often is in the beginning, how many houses do I have to see? How long is it going to take for me to find my dream home? Very much depends on you, very much depends on the market we're in. So if you have a very distinct preference of what your home should be, and you're like, I need that, craftsman style with the beautiful kitchen, all of this, it could be easy to find if that is in a price point where not a lot of other people are buying, houses are sitting for longer. But if it's in that average price point, which here in the Portland Metro is about 560, a lot of other people are going to be vying for those houses. We're going to have to do some tricky things to get you into that home. And it might take you a little bit longer to find the one that's actually yours, because we might have to write multiple offers. So when it comes to how many houses you need to see, typically people see anywhere from about 5 to 20, as I say here. In a market like we're in right now, that's a lot stronger of a seller's market. We're actually going to see probably, a little bit more than I will say recently the market shifted a little bit. So I have people go out and successfully only see about 5 homes one weekend and get an offer accepted. I have people that have been shopping for the last 6 months and have wrote a few offers and are still looking. And that's usually based on their preferences being fairly high, or they're just in a really competitive market. I have people right now that are looking in like the 450 to 500 in central Beaverton, and that's a really tough market. So Beth, you're like smiling, you're like, yep, you've written a lot of those pre-approval letters. So
Yes, they're lovely though. It's going to happen for them, but it's a tough one for them.
Yeah, we're super close. And then, once we have seen a decent amount of homes, we've written an offer for you and it gets accepted. Yay. That's when we start the actual home buying transaction. And so for that, the first thing that's going to come up and what most people have their questions about is the financials of the transaction. So when we're writing your offer, it's all on DocuSign. We're going to meet at the house, you fall in love, and then I'm going to run back to my office and I'm going to start writing all of that out for you. So ideally, we're already going to have a really good idea of your budget because you've gotten pre-approved for your loan with Beth. And then we're going to come up with a purchase price. So we kind of have like the max amount of money you would want to spend on a house, keeping in mind what your monthly payment would be. And then we're going to have an idea of what's like your ideal. So within that range, we're going to find out what's going to be comfortable for you to ask as your purchase price for the home that works both for you and then is also competitive in this market. Now, based again, as what we said on, what market you're competing in. If you're looking at townhomes and condos, that market tends to be a little less competitive. So we can have a conversation based on like what comparable houses are in the area. Honestly, if you're buying a house in the super competitive market, single family houses in the 500 range, a lot of it's like, hey, what is comparable in the area? So the house appraises, but it's also what do we need to offer in order for you to win based on how many other offers there are. So there's a lot that can go into the purchase price, but that's something that's definitely case by case. And we can talk more about based on your specific needs for a home. And then within that, for your offer, there are a lot of other areas and, financials that you want to consider. So earnest money, which is basically, I like to call it like your down payment for the transaction itself. So it's 1% of the purchase price. So if you have an offer for $400K, you want to plan to have $4,000 already in place, as this money will need to be available within the first 3 business days of your transaction. So if we get an offer accepted, within 3 business days, you need to have that money available. Typically it's 1%. It can be less if needed. I've also had cases recently a lot where we've been doing more just to kind of show the seller like, hey, we're really in a strong place financially. We're motivated to buy this house. And this money does go towards the transaction anyway. So if you have that money already in place, you're already paying your own closing costs, it's not a bad thing to go about and do. And then with that money, it is given back to you. So let's say you pull out of the transaction for any reason, you do get that money back based on any contingency. So if it were at the end of the transaction, you're like, I don't like the house, the seller would get that money basically as to recoup their time and labor for working with you. But within the transaction itself, in a contingency period, like the inspections, as I said, you would get that money back anyways. And then other costs you want to think about, your down payment. Now that will be one you'll really talk with Beth about a lot kind of before we go into this, and that will affect, what you get pre-approved for anyways. The others you want to think about are your closing costs. So as I said, there are closing costs to consider, which are typically about 3% of your purchase price, can depend on what type of loan you're doing. And that's money that will be paid out at closing. The last 2 are your inspections and your appraisal. Beth will talk more about your appraisal, but for your inspection, that is something that I will help you schedule out. And that is another more immediate cost. And it's a cost that you'll want to consider is not going to be given back to you. Like if we are to find that you don't like the house for any reason, especially based off the inspections, you will be taking on that cost. So that's something too, as we tour houses, I will note to you like, hey, the roof looks a little funny or this or this. That way we're both really aware of what's happening with the home. And that typically is going to range anywhere between like $450 to around $1,000 based on what you choose to do. There are 4 different inspections that are usual to the transaction: the general home inspection, an inspection of the sewer, a test to see if there are any old oil tanks on the property, and then a test to do the radon levels. General home inspection is the one that's about $450, and then the other 3 are add-ons from about $100 to $150. So just kind of keep that in mind. Those are things you want to be prepared for and have money available or, you know, credit available to take care of. And then kind of for other parts of the transaction itself. So during the process, right away, you should get any disclosures from the seller. We'll go over those, make sure if they have anything they want to tell us about the house, if there was any flooding at any point, anything of that nature, that will be disclosed to us. As I said before, we'll also schedule any inspections. That will be the first 10 business days of the transaction. We will go through, you know, with the inspector, he's going to go through the home, give you a really good idea of what is happening with the house, if there's any issues that we need to take care of. We are in a seller's market right now, so I always do make people aware that, you know, we are in a market where health and safety are going to be our biggest concern. So if there's anything that's structurally really wrong with the house or that are going to affect the, you know, ability to live in the home, like mold growth, a roof falling off, you know, things like that, that are really going to affect the ability to live in the property itself. When those things come up, that's when you're going to schedule meetings with a contractor. So that's something else I will do as well, is if the roof needs to be replaced, or if there are certain things that are of issue that you either want to know to ask the seller for, which we can talk more on a personal basis on how you negotiate that with the seller, or if it's something you want to know for yourself. If you're like, hey, well, we would like to take, the roof seems like it's not in the worst shape, it has 3 to 5 more years on it, but we would like to replace it at some point. We'll get someone out to just give you an idea of the cost for that. So there's different ways you can go about it. But yeah, that's where kind of scheduling contractors to come in would come into play. And then, as I said, we would also start to negotiate repairs. So for negotiating repairs, bunch of different ways that can be done. I do want to keep us fairly brief. So I will just say on that, you know, you can either ask for a seller to repair the property before closing. You can ask for a credit. So have them pay for part of your closing costs, ask for, you know, hey, there's some mold in the attic, we need to get it treated. That's $3,000. Ask them to cover the cost. That way you can do it after closing. Or, you know, you can ask for a price reduction. You're like, hey, there was a bunch of little stuff wrong with this house. We didn't really, when we thought of what we wanted to offer as our price, we didn't adjust it for these things. So we're going to ask you to lower the price of the home. And then the last one on that is, you know, if you just say like, hey, we don't like this house. I've had a few people recently where they're like, this house is just wild. There's too much stuff going on. We're going to terminate the transaction. We're going to move off of this. As I said, that's when you would get your earnest money back, where you would say like, hey, in this first 10 days, we realized we're just not comfortable with the situation. So we're going to have to back out. And those are kind of how the ways that you can take care of going through repairs. That's going to honestly be the biggest part of the transaction. Again, we'll kind of talk more about this one-on-one, but those are that's usually the part where once you get through that, we definitely still have appraisal. There's a bunch of documents that me and Beth both have you to sign, but a lot of what's really, I think, Beth, would you agree? Like that's usually kind of when a transaction will either fall through or go forward is during the inspection.
Yeah, absolutely. And actually it's interesting. One thing about, you know, repairs or seller credit or all that, so everybody knows, Lily and I can work together on that to figure out the best possible solution for you. Because a lot of times people are surprised that a price reduction doesn't do as much for your monthly payment. So we'll work together to figure out like, okay, are you a little short on cash to close? You're probably going to have more benefit by seller credit. But yeah, and it's funny, like in California, they do all their inspections prior to going on the market, which actually seems smart. You know, I kind of wish that we would adopt that model here because it would save everybody a lot of time and maybe not have a sale fail, which is what we call it. So,
oh, it's huge. Yeah, I have a friend that works. She was a realtor here in Portland and now is a realtor down in California. And she's like, it's so different. It's so nice. Like we have all the inspections done ahead of time. You get to see what's happening with the house hard part on there is California has an expectation that you're going to buy the house no matter what condition it's in, and you're not going to get any, negotiations with the seller on that. So it goes both ways.
Yeah.
But yeah,
To be clear, I'm licensed there, and California real estate is wild. So we should all be glad that we're here and it's not quite as insane as it is there.
Exactly. Oh, it's so true. But no, I love that point about the repairs. Yeah, that's kind of where it comes in, because a lot of time people, if a, God forbid, a bid comes back for $200,000 or sorry, $20,000, which never usually happens. It's closer to like 10,000. Unfortunately, you can't just ask the seller, hey, give me $20,000 to take care of that. There's only a certain amount of closing costs you can get back from the seller. So usually it's that 3% that you have for your closing costs. So you do want to keep that in mind. And that's where people start to do the adjusting the price or asking them to take care of the repair before closing. And that's something, yeah, we would just all kind of address together. Yeah. And then, yeah, as I said, those are kind of the biggest parts. Appraisal is definitely going to come into play as well, but that's, for Beth to kind of talk more about, that's her side of things. And so on my end, that's really the buying process. I know that was a lot of stuff. And so I'm happy to talk that over with anybody again here after. And we also are recording this. So if you want a copy of the recording, let me know as well. But yeah, once you get through inspections, once you get through appraisal and the million documents we send you, that is when you close on the property. So we'll be sending you like exciting messages, and that's when you get the keys to your house. But before that all happens, I do want Beth to kind of talk about her side of things and let you know. I'll just let you know quickly also, if you want, I have a buyer strategy guide that I can send your way with some more details on the home buying process. And there's also a few little resources on the first page that you can kind of start dialing in what exactly it is that you want in a home. It's a helpful sheet that's very basic that kind of just goes over like, all right, we need 2 bedrooms. Do we work from home? All of that stuff to kind of get your head rolling in that direction. And then you can send it to me as well. That way we both know what you're looking for in a property. And then elsewhere, if you want more resources from me, the best place that I'm always actively updating, way more than I do my honestly, my actual website, is my Instagram. You'll get basically daily stuff on my Instagram versus my website. So feel free to follow me over there as well. And then I'm going to stop talking for a little bit because I've been doing a lot and pass you over to Beth.
Yeah. Hey, everybody. So yeah, I am going to tell you a little bit about my process, and Lily will be so kind as to run my slides for me. So thank you, my dear. Yeah, I've been in the mortgage industry for 7 or 8 years now. I got started after I had a really bad experience with my first mortgage. So I take that, the process to heart, especially I have a lot of first-time home buyers who like that level of hand-holding through the transaction. So that's super important to me, that everybody feels comfortable and cared for, and that you're never wondering or worrying about what comes next. So that's kind of my bread and butter. I am with Academy Mortgage. We're here. I'm based, my office is in Portland. I do serve multiple states. So if that was ever a conversation, I'm glad to help. And then also my teammate, Emily Frack, is on the call too. So she's probably been reaching out to you guys if you want to schedule consultations. So she'll be a friendly face to kind of help you through as well when we're working. Okay, so I think I'm good for my next slide. Yeah, so one thing I send out in the beginning, and if anyone has interacted with me, you probably know I have my yays and nays that I send out at the very beginning, and then we send it often as a reminder. So we'll go over all of these things in our, initial consultation for your loan. But there's a lot of tips to kind of help things go smoother for you. A lot of them are common sense, right? Like, I need you to not quit your job halfway through the transaction. Don't spend your down payment money. Don't finance a Ferrari. Don't co-sign on anything for anybody. But there are some that are a little bit trickier. So the point is that I just always encourage people to be very open with me. If you have a question, just ask, and we're going to figure it out together. A big one, especially with a lot of people who may be first-time home buyers, is gift funds from parents or relatives or unmarried partners or whatever it is. So that's a huge one. And that's one that I always encourage people to check with me, because there is an easy way to receive gift funds where it's very streamlined. And then there's a way that involves a little bit more paperwork from your gift donor, which, if their parents and they're old school, could feel a little bit intrusive. So those are kind of the basics, and we'll cover all of those things. But I'm glad to send this out to anybody who's interested, whether you work with me for a loan or not, because it's going to make your life a lot easier. I tell people everything that's on here is something that's happened to me in a transaction, including someone who bought a brand new boat. So just words, yeah, words of wisdom. Okay, I think I'm ready for my next one. Okay, so as Lily discussed, the pre-approval process is hugely important. And I do make the distinction of having a pre-approval rather than a pre-qualification. So a pre-qualification is when you verbally tell a loan officer what you make and what your credit score is and how much money you have in the bank, and they give you a pre-qual letter. That is not the same, and it is not as good as having a full pre-approval. Because a full pre-approval means I've checked your credit, I know that it's good, I've seen your bank statements, I've seen your W-2. If you're self-employed, I've looked at your tax returns very thoroughly. I know that you have a job, I verified that. So that's really important when it's a competitive market, is to make sure that your pre-approval really is strong and dialed in. One of the things that Lily and I do together when we work together on transactions is we have, she'll put in the offer and tell me, okay, listing agent has the offer, please give them a call, within the next 2 hours to talk about how great our client is. So that's one thing we do together that kind of sets us apart from, the 5 or 10 other offers that a property might get. And in order for me to be able to make that call and very confidently talk about, how you're such a great borrower, I have to check out all this stuff ahead of time and make sure I know my facts.
No, and you doing that, I had someone ask me that recently. They were like, does every loan officer do that and call in? And I was like, not at all. Like, that's very, very rare. And it's really, really helpful. I find, one, that they know, who you are, where you work, you have that reputable person, but also when it comes into circumstances where someone might have a different type of loan, like we just got an offer accepted for someone with an FHA loan. Some people have like weird stigmas about different types of loans, things of that nature. So it was really helpful for you to call right away and say like, hey, they're really, really strong borrower still. This is their situation. This is what we're hoping to do for them. And I feel like that's what won them that offer.
Yeah, absolutely. And that's kind of what it comes down to, is really good communication. So that's true, of showing a listing agent that that's how we're going to be with the transaction. And then also, for the clients to know that that's what they can expect. So, so kind of, going through the pre-approval, it's great for you all to know, I'll get you a sample worksheet of, here's the cash to close, which is, it's comprised of 3 different buckets. It's your down payment. If you have one, we do have some 100% financing products, so you may not need one. The other piece of it are prepaid taxes and insurance. And then the third part are closing costs. So I'm going to send you a sample worksheet and we're going to go through it line by line. And I'll tell you, here's what this fee is for. Here's what this is for. Here's the situation where this fee might be higher, might be lower. Maybe you don't need XYZ fee in certain situations. But the point is, it's going to be conservative, because I do not want you to end up like I did so many years ago, needing an extra $10,000 to close a transaction that I did not have and didn't know was needed. So getting you the information up front is key to me. Yes. So I think that's good. Okay. So I did touch on this a little bit, that pre-approval, not pre-qual, is very important. And that kind of gets into sometimes people will kick the tires and get, a pre-approval with an online lender. If they haven't verified all your documents, if they haven't asked for your W-2, your pay stub, your bank statement, it's not worth the paper that it's printed on, basically. So keep that in mind. And then in order to do this, there's a couple of things that we look at, and I think of it like a grid. So there's the credit, right? What is your credit score? Do we have any credit issues in the past that we have to work on to get you in better shape? So things like late payments, a big one can be having some late or deferment or forbearance on student loans. That's one that we would definitely want to be working on together. Other things, if you've had a mortgage in the past and there was a foreclosure or any type of bankruptcy in the past, we'll work on that together to make sure you're in the best possible shape. So that's your credit profile. Your income is another piece. Oh yeah, go back. Yeah, so your income's another piece. Kind of depends on what you have to send me based on what your income is. If you're a W-2 employee, it's pretty simple. That means that somebody else employs you and sends you a W-2 at the end of every year. If you are self-employed or more of a gig worker, those can be a little bit tougher on income. Not that it's, bad or not possible to get a loan. I just have to ask you for more documentation, and it takes, maybe an extra day to get a pre-approval done. Okay. Final thing is your assets that we're looking at. So that is, where's the money that you have to buy this home? Is it a gift? Is it in your own checking or savings? Is it in a brokerage that we have to liquidate? A lot of people do go to retirement accounts and borrow from those. Maybe not the right solution for everybody, but in this type of market, a lot of people do find that accessing that, whether it's a loan because you're a first-time home buyer or a straight up withdrawal, can work well for you. So that is good for that slide. Okay. Yep. Paperwork for days. I try to make the process fun because it can be quite daunting, all the things that we need. My commitment to clients always is that I'm only going to ask you for the things I know we absolutely positively need to try to reduce the stress on you. So this is just a sample of some of the things that we would ask for right from the get-go. And then of course, if documents come in and there are, based on what I see, I have questions, we just might have to have a follow-up conversation. A big one, again, going back to those gift funds, is if your bank accounts show large deposits, then we're going to have to ask you, where did those come from, and ask you to source them. So going back to my yays and nays, one thing that's on there is, be cognizant of what's going into your bank account. Any non-payroll deposits, just know that if they are more than 50% of your income, we're going to have to explain to an underwriter where they came from. We just want to make sure that it's your money. They're, back in 2008 and probably even still, money laundering in the mortgage industry was an issue. So anytime there's a silly rule, there is usually a good reason behind it. And I can talk for days about what went down and why these rules are in effect now. But point is, it's just the guidelines that we have to abide by. And it's really important for us to just call it out early and make sure that you're aware so we can anticipate, and that's not going to cause us an issue later in the transaction. So next slide. Oh, I got through that really quick, didn't I? Hi. Yeah. So yeah, you can go ahead to the next one, Lily. So yeah, you guys are welcome to reach out for me. I do, I have my Instagram. I'm super big on texting. My phone is like literally always right here next to me.
Always so impressed how fast you get back to me. That's what people ask me, like, oh, should I work with Beth? What should I work with? I'm like, if you want fast communication and good communication, like I had that recently, someone was debating who to work with, and I was literally on the phone with you in drive between home showings. And I was like, so I was just on the phone with her. So that might be,
yeah. We are on the phone quite a bit. So, yeah, but the point is, I just want to make sure like everyone's super, super comfortable. Again, I always go back to like my horrible experience of, being a first-time home buyer, bewildered, not knowing what was normal and what wasn't. So I never want any of my clients to feel that way. Yeah.
Perfect. Yeah, I feel like that was a good kind of overview here of the process. Again, we didn't want to like bore you with too much of it. So there's a ton you still need to know, a lot that we can go over in person with you, or we'll over Zoom with you. But yeah, we're going to kind of open things up to questions. I do see there was one here from Hannah, I believe for me about this is, from the beginning there, I just saw it, kind of about price range and understanding the market being competitive. I think this is something good for us to touch on. I can touch about on the market in general right now. So yeah, as I said, we're in a strong hot sellers market. So if 560 is the average price point for a single family house. Now that's for a single family, 3-bedroom, 2-bath with no updates, maybe a few things wrong with it that you're going to have to take care of. That's the average price for that style of house. If you're talking about what's going to be where there is, what's the range of where it's going to be competitive? I would say that 560 and below is where it's going to be really competitive, about down to like the 350 range. I have seen some little cute dinky houses that need some work and like the 350 range that have been sitting for a while on the market. And then within that, if a house needs some updates, if it needs some fixes, or there's something that might, like I'll say to people too, I'm like, there's some things that'll be like a no-go for most buyers that will be okay with you. So we can have that conversation. Like we definitely don't want you taking on a foundation issue, anything like wrong with the house. But if it has like an outdated kitchen that have been throwing other people off, or just something, you know, odd about it, it's on a busy street, but you don't care about that, it's by the freeway, something of that nature, that can be a really good benefit to get you into a home. But yeah, basically in between that like 450 to right below 600 is where I would say the market is most competitive. And then anything above 600, it starts to get a little bit easier. And that's where you see homes sitting on the market a little bit longer. And then again, as I said, lower than that. And that's all what I'm saying here is for single family houses. So if you're interested at all in, you know, the process of, or sorry, interested in townhomes or condos, that's a whole different market. So that can be really easy. If you're someone where you're like, I would really prefer a single family house, but a townhome of a certain style, or it still, you know, it still has a yard, doesn't have a large HOA, that's when your market can open up a lot for you, is in those townhomes, which do sit on the market longer, and then you're not dealing with as much competition. Did that answer your question? I can talk about that a little more. Good, okay, cool. Ooh, yeah, I want to talk about appraisals. Beth, you want to handle that one?
Yes, absolutely. Where to begin? So appraisals, first thing I'll say is that there is a shortage of appraisers in the state of Oregon. They make it really difficult, and in my opinion, too difficult to become an appraiser. So, and they are independent contractors, which goes back to 2008, appraisers in 2008. And I should note, I was not in the business in 2008. Okay. So, you know, I'm too young for any of that monkey business. But point is, you know, at that time, appraisers and lenders were really cozy and sometimes employed by the same companies, which obviously creates a conflict of interest. So appraisers are independent contractors. What that means is when it's busy, because we don't have enough of them, appraisal costs can creep up. You know, you could, in the slow season, an appraisal might cost $700, $800. Now that standard is pretty much like $1,000, because we have to write a close date so quick such that the seller will accept it. But that means we have to get that appraisal turned around within that period. So Lily and I will work together on that, on the timing. One thing we always want to make sure is that the appraiser doesn't visit the property until you're pretty dialed in with your repair negotiations, if there are any, because as soon as they visit the property, they're going to have to charge you the full fee. So we work on that together. The point of an appraisal is to make sure for the bank, for my company, that the property they are going to give you a loan on, their collateral, is worth what you're paying for it. If you guys remember back in 2008, you would hear the, you know, underwater a lot. That's kind of what we're trying to avoid here. So it's good for you to know, but it's also, you know, selfishly for the lender, they want to know as well. So Adrienne, I guess the question would be like, are you, you know, is it a concern about if an appraisal doesn't come back at value, or like what the process is of an appraisal, where they arrive at their value? Like what was the kind of drilling down? Okay, all of the above, he said. Okay. So, and Lily can talk a little bit about the comps that go into it. It's actually fascinating when you read an appraisal report, everything is off of comparable sales. So comps is what we call them for short. So, and then how is appraisal different than assessed value? Yeah. So I'll get back to that. I think in the meantime, I can kick it to Lily to talk a little bit about comps, because that's how, you know, that's kind of in your purview, and then I'll kind of pick it up again.
That's a really good question. So that kind of goes into, you know, the market we're in, what type of house you're buying, because yeah, if you're buying in that super competitive range, we are going to still take a look at what comparable properties are in the area, what's been selling recently. Really what's important to me, I find, is like, what was something listed for and what did it actually sell for? Because that's a really good thing to know about this market. You might go, oh, this house is listed for $450. It works for me. You know, it was just listed. It'll be great. and then that house will sell for 550 or more likely, 510 or something of that nature. So we want to be really aware, like what's that price jump going to be? And that's something we can talk about before even going into the process. But in terms of the appraisal, that's where it gets a little tricky in the more competitive houses, is you might be writing those offers for, 20 to 50K over asking. And it might be a little bit more than what homes have sold for in the month or two prior, but we at least want to look at what's comparable in the area. And then when it comes to other markets that, are a little less competitive, if you're looking at houses that have been sitting on the market for a while, if you're looking at townhomes, condos, if you're looking at a price point that doesn't just get taken off the market in 3 days, that's when we can really look at what's comparable in the area and see like, okay, are you buying with in a strategic way where you're still competitive, but you're also making sure that the house will appraise, and we'll still want to do that on the competitive properties. Appraisers, luckily, from my experience, have become more aware in the last few months of how intense our market is at the moment. And so even if there is a little bit of a price jump from where things were the month prior, they will often recognize that and will price things accordingly. But yeah, in any case, we'll want to look at the comparable properties before we write an offer for you, just to make sure you have all the best information and know, where you're going to feel comfortable writing an offer and what's actually going to win it.
Yeah. And then I'll kind of tie it up. So Adrian, I know you had a question on the assessed versus appraised value. So assessed is what the county uses, and then appraised is what the lender comes up with. Your appraisal is private information to you. You're the consumer of it. So a lot of times, thankfully, Lily and I together have had some that have come in high recently, which is great. It just makes you feel good that you got a good bargain. And then the next question is always, well, wait, does the county know? And are they going to raise my taxes over that? The information's private to you. Nobody knows but you. If I have your blessing, I share the value with Lily because I think it's good for agents to know. And then on the listing side, I do have to tell the listing agent what the value was in a general way. I just say that it made value. So they're not going to feel weird if, it appraised $5,000 high. Nobody's going to have their feelings hurt or feel salty about the deal. All they need to know.
Yeah.